On behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to Financial Compass with Mish Schneider. I am your host, Todd Schoenberger, and the star of the show is none other than the Chief Strategist at MarketGauge.com, Mish Schneider. Mish, so much to talk about since the last time we met. We had the payrolls data that came out. We have inflation data with CPI and PPI. You also had retail sales numbers come out. How are you trading this market? We have a rising market today, but is it going to last?
Well, we had talked about this, and by the way, good morning, Todd. We had talked about this for the last couple of times, which is we're going to start off well this year, that we kind of have that switch astrologically as we go into the year of the Yang fire horse, that people are feeling very optimistic, very much into taking risks, and yet we expect volatility, and we've seen a little bit of that already in pockets. So that's following along according to the plan. I mean, essentially, if you look at the inside sectors of the U.S. economy, what are they telling you? Transportation is doing really well. The small caps have been actually leading over NASDAQ, which is amazing, and technology. That's the first time we've seen that since 2008, actually. And the retail market, with the retail sales being firm, it's a nuanced market, but it's still holding XRT, if you look at that as the ETF, holding very well. Still not at 2021 highs, but that's okay. I mean, that was a very unusual time with a lot of stimulus and people were home and people were doing a lot of online spending. Now we're still seeing more online spending, but we're seeing a little shift out of luxury brands, more into staples. Obviously we've heard about Saks Fifth Avenue declaring bankruptcy. I'm hearing Bergdorf Goodman might be in suit to that as well. So basically what we're seeing now, I think, is a better scenario for America. And I say that because of the price. And I always tell you, right? We always talk about that. The price is going to dictate what's going on. Semiconductors were lagging, of course, until today when we had the unbelievable Taiwan semiconductor report. That shot everything back up. So at this point, even the banks were looking a little faltering there, but Goldman Sachs kind of helped that out a little bit. We're okay. Right now, we're okay.
Okay, I like that. I love the optimism and definitely the positive attitude. The one item that did not solve itself since our last show was the geopolitical events that are taking place. If anything, things have actually gone to another level. So with that, let's segue into oil right now. You have oil up over 9% over the last handful of trading days. We see the price of crude in the 60s now. Are you a buyer at this price, or do you think this is just a one-off moment?
Well, last time we talked, we looked for a couple of closes. I think it said over 59 in WTI would be a buy signal. And of course, where do we go? We didn't really go very high. And now actually we're back below $60 a barrel. We're more down around 58 and change. So, we saw the immediate impact with the threats with Iran. Venezuela, I don't think is really going to have much of a long-term impact. There's still a lot of just working things out, right? And a lot of rumors coming out, oil companies saying they're not going to invest because of infrastructure. They want to make sure that the actual political situation in Venezuela is solid. We know there are guerrilla groups there. We've talked about that. Now Trump came out and said Iran, maybe not so much. We're not going to go in there. Things are calming down. You can't look at all of that, right? So essentially, let's just look at it on its merits. If oil holds over $58 a barrel, that's the major support. Then I would still tend to be friendly, but I'd still now want to go back to my original thought that we had last week, which is I want to go back to seeing a couple more closes over 59. And then if we can get that, I would say, again, like I always say, that the price precedes the fundamentals, and we'll learn what that is. We learned what it was last week. Now we're in a different, and that's what you're saying, right? Fundamentals are changing all the time. It's so hard to really know. So I would say 2 closes over 59 would make me back to bullish. Obviously, there's going to be resistance on the way up, but I think overall, considering a lot of people came out bearish this year, I can't be bearish, but there are so many more interesting places to play right now than crude oil. I really want to see a more solid setup.
Okay. Well, let's move on to the metals then. Now, I have to say, and I'm going to, yeah, I'm obviously I'm gonna have to float this because you were one of the first, if not the first, on Wall Street to really go bullish 100% on the metals, gold and silver. You mentioned silver. You saw silver at 85, and this was back when you were on one of our other shows on BTT, probably 9 months ago. So just a wonderful call, winning call. Now we're over 90. We clipped 85. Now we're over 90. Where do you see silver at this point?
I still love it. There was an initial reaction lower this morning, being Thursday, when again it seemed like things may not be so bad in Iran in terms of U.S. interaction. And I don't know if I necessarily trust that, but at this point, it again doesn't matter. $85, which was my target, is now, interestingly enough, support. So as long as we hold 85, I don't see any reason why this can't go to 100 next and maybe even higher. Nothing has changed really in terms of the demand. And now with what happened with the semiconductors back in the game, and AI and data centers and EVs and solar energy, all of these things that are needed, silver is one of the critical components for that. Even the dollar going back up hasn't really impacted much. So I would take profits maybe a little under 85 and hold some because I'm long forever. But I definitely see more upside, no doubt.
So, with the Supreme Court ruling imminent on tariffs, I predict that we will get the ruling after 4 o'clock Eastern on Friday because we're going into a 3 day weekend. It gives the market some time to digest the ruling. But it does seem, at least the temperature within the Supreme Court, is that they are going to vote against Trump on these tariffs. I would think, and you tell me if I'm wrong here, wouldn't that be just a significant, a major bullish signal for the metals, or would you recommend getting out before that ruling comes out?
Well, I wouldn't get out before any ruling because so far they've delayed the ruling twice. And even though technically they're supposed to do it again tomorrow, I also saw rumors that it may not happen now until June. So it's hard to say, obviously, but it wouldn't scare me out. Just like not one statistic scares me out. If I have a nice cushion, obviously we're talking metals, and we do. What's so interesting about that ruling, I think what it could be bullish for commodities for sure. No doubt about that. Although the tariffs were supposed to be bullish for commodities outside of gold and silver because there apparently was going to be a lower supply of them with tariffs. And that didn't happen. So maybe this is the catalyst to make them more bullish. There's so many other little mini stories we can talk about that. But overall, my sense is that there are loopholes. And there will be loopholes. And Trump is a master at finding loopholes. And so, yeah, I mean, I think it could be a positive thing, but it could also be the kind of thing where it jolts the market a little because the faith in Trump wavers a bit. Right now, the market is totally behind Trump. That's what it looks like to me.
It's interesting. I haven't thought of that perspective, but that is a new take. So, one item that you did bring up last week was talking about soybeans and corn and wheat. Let's talk about the USDA report saying that there's going to be healthy gains in corn and wheat. Are you a buyer then, or are you thinking maybe I missed a rally?
Well, that's one thing is the crops. And yes, that was a surprise number, such a surprise number that a lot of people who really follow that, particularly in the farming industry and agricultural industry, and I'm just a trader in terms of I look for opportunity, are suspect on that report. It was like, how can the estimates have been so way off, and how did USDA get there? And apparently they use satellite, very, very advanced satellite technology to make those estimates. But what it doesn't take into effect is two very key things. Number one is sales. And right now corn exports are at 5-year highs. So that's been, obviously a little bit of an offset. The other is going forward crop conditions. And I've been reading that there hasn't really been enough precipitation in some of the corn growing regions. And we never know as the season goes on what happens there. So I think right now you have to look at that 420 in corn held. It broke it briefly, but it held. We get back through 425. I think that means that, oh, also, by the way, ethanol production is another thing influenced to corn, and that has increased, which helps corn. So there are so many factors. So you just got to look at the price. 4 through 425, I'd be like, okay, not so bad. If we're looking at wheat, I mean, there's been a lot of concerns now about farmers and what's going to happen to the farmers. There was a big announcement about cutbacks in biofuels. The farmers have already suffered. They can't break even in corn, by the way, unless it's trading at around 471 and it's trading at 420. And with soybeans, they don't break even until it's about 1080. And right now, that's also been under pressure, has been the soybeans. So 1040 right now is what has to hold. If it gets through 1080, that's probably bullish. So what I'm saying is you can look at all of that, but probably to me, the most interesting thing is to look at the basket, the aggregate of all of the grains that also includes cattle and softs, and that would be DBA. And this is what you and I talked about last week. I'm long
The
DBA.
Oh, go ahead.
I'm long DBA. It's 25.40 is my max risk, though. It breaks down under that. That would be the January low, and that would get me out. But if it's holding it around 25.60 as we speak, if it can get back through 25.65, sometimes these massive surprises turn out to be the flip side opportunity. And so, like I've seen USDA reports that showed major shortage, the market spiked and that turned out to be the top. So this could be the reverse. The market dropped precipitously and that could turn out to be the bottom. We'll see.
So over the last couple of years, we've seen a lot of Wall Street firms take an interest in Iowa corn farms. It actually helped really double the price for these farms. Does that take any, does that equate or is that part of the calculus of pushing corn prices higher per bushel, or is it just simply a supply and demand effect?
Both. Supply and demand, of course, is always going to be ultimately, but remember, the very, very, very first commodity and the very, very first actual exchange trade in commodities was corn. So the commodities exchange was created for corn for farmers to be able to hedge, right? So at this point, I think a lot of farmers were caught off guard when this big dump. So if you're looking at the big corporations, not only can they withstand that, but it would behoove them to kind of go to your point, to go a little bit beyond the supply and demand currently and look at the fact that the demand's most likely going to grow, in which case the price of the corn could go up. That would help them, just like the oil companies. It's the same deal. We know oil companies don't make money when oil is at $50 a barrel. So, you learn to read the manipulation, but kind of put it aside. And like I said, really follow the price movement.
You mentioned ethanol. I mean, I'm a corn-based ethanol. I mean, this is going back a couple of decades. I didn't realize it was in favor. Are you seeing?
Yeah, it's still a thing. This goes back to the all energy hands on deck. What's so interesting is, where natural gas is so cheap, it makes you wonder. Oil, of course, is such a political football.
Yeah.
But solar's been doing well, and the things even that the administration has been anti, like wind energy, has been doing well. We know that nuclear fusion is something that's being discovered, but we still do ethanol. We still do that. And actually, some people say ethanol and biofuels are a much better alternative because it's cleaner. So it's so hard to know, but I will tell you that I went out last night with a friend of mine who is from China. I mean, she's been living in this country for quite some time, but she has a big pipeline to China. She speaks to her family there. She follows Chinese news, etc. And she was basically telling me that this Venezuela story, number one, doesn't really affect China too much because they really get a very small percentage of their oil from Venezuela, that Iran would be a bigger influence for them. But overall, it's still relatively small and in decreasing in terms of its needs in China because they're going more and more and more into nuclear fusion and clean energy, and they actually are well advanced of us right now. So that's why I'm so interested in these things here, because it could be that there's still great opportunity for investments in these areas because the US is a little bit behind, and we know we don't like to be too far behind.
Right. I'm going to push back a little bit on the ethanol, and I'll tell you why.
Okay, go
Because ethanol, the way it's created, it actually has alcohol as one of the components, and they can't transport it or transfer it to other locations because of the pipes. It actually corrodes pipes. So you
ahead.
have to actually put it on a truck, a tanker truck, and have it go out to the east and west coast to deliver it, to deliver the product, and therefore it's going to increase your costs. So
Right.
with oil going down, gas prices going down, an oversupply of oil, I'm not going to believe anything about E85 until I see an ethanol pump on the corner of Washington or 1600 Pennsylvania Avenue and 17th Street, because I cannot imagine that ethanol will ever be anything because of the transportation costs to get the product out to the public. But we'll see.
No, listen, it's not like I'm pushing ethanol. I just read factually that there was a jump in ethanol with corn. And that's one of the reasons why corn has sort of stabilized at around this 420 level. I was just reporting the facts, just the messenger there.
And that's what we do here at BTT, and I love you for it. I will say I'm not a big fan of any of the renewables. I think they're fads. I think they're great to, people talk about it for a little while. You get, the climate people that are concerned, then they buy into it. But it's just too expensive, the carbon footprint, to actually put together these renewables. It never works. So, but anyway, that's a topic for another show. I want to
Well, we
close
could
out the
just
show
watch
and get.
China.
Oh,
Todd,
go ahead. What was that?
let's just watch China. If there's any country that can figure out how to do it more efficiently and more cheaply, it's China. And
Valid
so,
point.
that's why I find it so interesting to talk to my friend because, China has 1.4 billion people. Everything they do has to be at the cheapest and most efficient for the government. Even though they have a common prosperity mentality there and not like let everybody become millionaires and billionaires, they still have the fact of having to take care of a lot more people than we worry about in the US.
Yeah, it's a very good point there, actually. I want to turn the page to the final subject of the day, and that's something that took place over the weekend between last week's show and today, and that is the DOJ criminal investigation on Chairman Powell at the Fed. What is your opinion on this, Mish? Because from a trading perspective, this sounds an awful lot like they're trying to manage the chairman out and therefore get someone that may be more dovish, and that would be good for equities. But is there a trading component or anything that you see because of what we heard over the weekend?
Well, again, let's go back in time to a conversation you and I have had in the past, which is when Trump puts his mind to something, he works every angle to get what he wants. And what has he wanted more than anything is lower interest rates. I mean, he's talked about 0% interest rates. So you're right. This could be just another way of Trump to take out his tools from his tool shed, to get rid of Powell, put in Hassett or somebody like that who's going to be much more dovish. It could backfire like other things have had to have happened to him. Because what if he isn't really guilty of anything illegal? He is basically going to still be on the board till 2028, even if he has to step down as chairman. So he still gets a vote. I mean, there's all these things. So again, this is what I love. I love all these conversations for the cocktail party, right? Sipping your martini and talking about Powell and Venezuela and Iran and all this stuff. But at the end of the day, really, the only thing that matters to me is what the price is reflecting. And what the price is reflecting in the interest rates right now is we've seen yields come down, even as the dollar's gone up a little bit with all these good economic stats we've just had. And so that tells me that now that we're over 88 in the long bonds, TLT, I'm still watching that 80-month moving average, which broke down and has been trading beneath that, which means the contraction or the higher yields has been the trend. Now, since 2022, when does that reverse? And if we get a good close, let's say over 90, let's give it a little room, about 90 in the TLTs, and it holds there, it doesn't matter. We could see the writing on the wall that the yields are coming down and the bond traders are banking on that. And of course, we think that the Russell 2000 are already banking on that because it's so interest rate sensitive. That's why we're seeing the small caps do so well.
That's right. That's right. Well, This is great, Mish. Always lots of information. I know the audience is loving the show. We were getting a lot of comments via email. Please, anyone out there who has additional comments, leave it in the chat or send us a note and let us know what you're thinking. Coming up next week on Financial Compass, we're going to prepare you for the Fed meeting. We're going to ask Mish, how would you trade your positions going into that Fed meeting, which is the final week of January. So next week, until then, we'll be live again at 12 o'clock next Thursday. You will not want to miss it. Mish, a wonderful day. I hope you have a great rest of the day today. I know you're exceptionally busy and you have so many other great things going on.
Yes, yes. And I know I have to give my 2-second plug for my YouTube channel.
Yes.
The Economic Modern Family. We have 10 videos up. We'll have another one out today. It is exactly the direction that I want to go, which is financial literacy, mainly pointed towards Gen Z. But it's a little bit of fun using my Economic Modern Family characters. And we've introduced an avatar of me, and you'll see very recognizably me, with an actionable bit of information at the end of each of the cartoon clip. And they only run about a minute and a half. So I hope you support me in this and go to the channel, subscribe, doesn't cost anything, watch the videos, give it a like, make a comment, and share it with your friends, especially your younger friends.
That's right. So it's the Economic Modern Family, correct?
Correct.
On YouTube, click subscribe. It's free. Go right to it. You're going to learn a lot, and the growth of this channel is just going to be exponential. You definitely want to be a part of it as we move forward into 2026. So much to learn from that channel, as well as the Financial Compass as well. Mish, I want to thank you. Everyone, go to MarketGauge.com to learn more about Mish Schneider and everything that her and her firm have to offer you. You will not want to miss it. You will not regret it. I promise you that. So until next week, I'm Todd Schoenberger. I'll see you at 2 o'clock for a live Money Path with Jed Ellerbrook, the portfolio manager from Argent Capital Management, will be joining me. So until then, take care.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.